this is for you. This goes out to one of the best property managers. Ain't no one else out there that can hang with you. You got these apartments on lock. Your hustle don't quit and your game don't stop. I know you're sick of me not paying the rent. Got my check next thing you know my money's spent. But I know I gotta reckon, and I'll have your money on the 22nd. Well, hello everybody. Listen, today we are going to tackle one of my favorite subjects, and that is paying off your mortgage so that you don't have to wait the 30 years. All right? This segment is going to be real estate related, mortgage accelerated. Are you ready? Let's do it. Now, let's say you have an income of $6,000 every month and an outgo of $3,000. All right? Well, you also have a mortgage, right? That's $200,000, and let's just say that's going to be at the 6%. What you can expect when you pay the same old way you've been doing and have been taught from youth, right? Traditional way of paying the mortgage is what? Just pay the monthly, right? $1,200 each month. Okay, if you do that and you live to see the year 2050, March 2050, you would have not only gotten older, but you would have gotten $231,676 more dollars from your pocket than you should have. Okay, over $230,000 in interest you would have spent on that one house. Versus, if you would have done it the velocity banking way, you would have only spent $34,637, and you would be done just in time for Christmas 2024. Isn't that awesome? Listen, you would be able to do this because you're going to be utilizing your line of credit. Let's say it's at $50,000 at 21% simple interest, right? Remember the difference between 6% amortized interest and 21% simple interest. That's the key. You're going to be using $15,000 of that to chunk away at the mortgage principal. Now, why would you do that? What does the interest feed off of? It feeds off the mortgage principal, doesn't it? That's why we want to chunk away at the mortgage principal. So you're going to go ahead and place that $15,000. Say, hey, banker, I want it straight towards the mortgage principal. And they're going to probably say things like, well, why would you want to know about that? Don't worry. $15,000 is going towards the mortgage principal so that it is now down to $185. All right? And that is not only cut down, but also your interest is cut down, and years taken off that mortgage. Oh, it's going to be so awesome when you pay that house off in 2024 versus 2050. You know, talk about 5-year goals, man. And so what you're going to do is you're going to continue to pay with your income inside of your line of credit, okay? And that's how you'll pay that $15,000 back, because we do have a cushion here, don't we? A $3,000 cushion. All right, so where we'll pay that back in what, 5-6 months, right? And so we'll just do it again and again and again and again until that mortgage is done with. We can brag to our friends and say, listen, let me show you how I paid this off in 5 years versus 30. Boy, that's one of the best friends in the world. Like, share, subscribe, comment below, give me some feedback. Listen, I want to hear from you. What do you want to see a video of? I want to make that happen. All right? God bless and have a great night.